All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Greenbridge investing market analysis. And cool, got a couple of students in here now. All right, nice to see you guys. You guys are committed. All right, we got Stian. Hey, HS, good to see you. We got Mr. Plow, Winterfresh, my Romanians. I'm sure Schwartz will be here momentarily, my international man of mystery. Alex K, good to see you. Alex Ferdian, good to see you. Kai, hey, good to see you all. All right, cool. So, oh, thanks for buying the ebook. All right, cool. So, a couple of interesting observations from the program so far, because I've had a lot of charts to look at, and here's the takeaway that I get so far. The concepts that that the content contains, right, in the videos is pretty straightforward and what I would imagine to be simple. And it's interesting to see, because you could Google these topics. You could go on YouTube and learn about support and resistance levels. You could go on YouTube and get a million videos on candlesticks. But here's the interesting part, because my videos are not, there are no secrets in what you're watching in my videos. But when it comes time to putting it into practice, this is where I'm seeing a variety of people's thought processes, right? Some people, they just get it and they speak my language and they give me an answer that I want to see. Others, they're not exactly understanding the concept. So what this tells me, and this is a learning opportunity, right? That's why you're in the program, because you want to get it right. This is why all the garbage on YouTube is so ineffective, because you may watch a video like on support and resistance, for example, and oh yeah, I get it. But when it comes time to applying it, you don't have any feedback. You don't know if you're applying it. You assume you're applying it correctly, but you may be off and you don't know. And of course, the producer or the author or whatever, they're not there to tell you, right? They're not going to tell you if you're doing it right or wrong, even if you send them an email. That's one of the great values of this program, right? And great learning opportunity, because you send me the chart, I look at it, and hey, this guy's got this, or this guy's a little off, right? And this is a boot camp, right? It's not a charting nursery. This is an analysis nursery school. It's a boot camp. So it's like, I'm going to force you to do better here. Anyway, that's one of the takeaways that I got so far. It's been a lot of fun. It's very interesting. I even got a chart from someone that there happened to be a buy signal on the chart. I'm going to show you that here in a moment anyway. So yeah, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, if you're new to the stream, welcome. If you have a symbol or a stock you'd like to see, an altcoin, please share it in the chat now, because I'm going to be going through all that. If it's a altcoin, please make sure to put USD or USDT after the symbol so that I get the correct symbol. All right. So we're going to be evaluating the charts, looking for potential scenarios or what's realistic over the coming week based on the techniques that I use, right? There are 6 of them. Now, I'm not going to explicitly go over those 6 techniques, because that's what the program is for. But those that are in my program now should be able to better follow what I'm talking about, because now you're going to know exactly where I'm coming from. Okay, cool. So, today is Monday. It's a holiday, by the way. Today is a holiday here in the U.S., so the markets are obviously they're going to be slower. Some markets, like the futures, were open and stuff like that, but it's not a normal market day, just so you know, right? If you weren't sure. Let's go over the economic calendar really quick, because it's very important, especially if you are involved in Forex pairs. By the way, those that have been sharing with me, a lot of people are very focused like on Bitcoin and altcoins, and one of the messages that I've been telling people is, hey, it's really to your benefit to evaluate other markets, even if you don't trade them, because you're going to start to see similarities and patterns that can help you when an opportunity is showing up in a market that you are interested in. So it never hurts to expand your horizons and maybe look at Forex, or maybe look at some stocks or something like that to just, to have a broader horizon. Anyway, so economic calendar, I'm looking at it. It's off the screen right now, but Today we have Japan Bank of Interest Rate. So we have Bank of Japan interest rate decision tonight, Eastern time. That's 10 o'clock. They have their monetary policy statement in their press conference. The yen is a pretty significant currency, so I mean it can have an effect on things. Then we have tomorrow. We have for the British pound unemployment rate. That I mean the pound has been acting very unusual. So that may have an effect. Also, claimant count change. Okay, no one cares about that. Some of these numbers are not really, they're not global market movers, right? We have on, what is this, Wednesday, harmonized index of consumer prices for Germany. Then we have for the British pound, consumer price index. Again, these are not big market moving numbers. Canada, Bank of Canada, consumer price index, core year over year. Okay, no one cares. We also have Bank of England's Governor Bailey's speech. That can affect the pound. Like I said, the pound has been unusual. It's been acting strange. So if you're in the pound or a pound cross, it might be interesting to keep an eye on something like that. Those events usually take place during the European, the Euro hours, the Euro market hours, which is like 4 a.m. or 3 a.m. Eastern time, just so you know. Then we have, let's see, Australia, unemployment rate. No, yeah, unemployment rate and employment change. Okay, not a huge market mover there. And then we have on Thursday, Bank of Japan monetary policy meeting minutes. Man, we can't get away from the Bank of Japan this week. All right, again, that's not a big deal. Then on Friday, ECB President Lagarde's speech. All right, and what else we got? On the 21st, Canada retail sales. So as far as economic news goes, there really isn't anything major going on here. All right. There's no FOMC meetings. There's no testimony from Chairman Powell. There's no interest rate decisions, right? There's nothing like that. There's no NFP. So the market should sort of be getting back to normal in terms of its trade volume and stuff like that. And there's no major news events that may cause the market to get hesitant, if that makes sense. And that's particularly important if you're more active, like in terms of day trades and everything. Okay. Anyway, so I just wanted to cover that. Always a good idea to keep an eye on that. Now let's get into Bitcoin. I'm going to talk about Bitcoin here, and then once I complete my Bitcoin analysis, I'm going to start going over your questions. Okay. So again, you can put your questions in the chat. Also, if you'd like to share what city or what country you're from, that's always a fun fact. You know, I'm streaming from the greater New York City area or northern New Jersey. That's why I sound like the way I do. Let's get into Bitcoin. So now, for those of you that are in my training program now, you should be able to follow this much more closely. The broader trend on Bitcoin, as I've talked about, and by the way, I wrote about this in my TradingView article yesterday. If you haven't read my TradingView article, there's a link in the descriptive portion of the analysis here. It'll take you to my TradingView profile. You should read my article. All right, I write a lot of details in there that would really help and give you some more context as well. Now, the broader picture, higher lows, higher highs, up to 69K. Okay, sure, we know that. Now, since then, we have this corrective movement. Here, let me highlight that corrective movement even further, so you can get a better idea of what I'm talking about. So this entire movement is a corrective structure. It's correcting the broader bullish trend, right? Okay. So one thing that you need to keep in mind is trends, right? There can be simultaneous trends unfolding at the same time. In this situation, yeah, the broader trend hasn't changed. It's still bullish, but the short-term trend, or as what I like to refer to as structure, is not bullish. It's a series of lower highs and lower lows. So that's a little conflicting, right? So like, which one do you go with? Which one do you believe? Well, part of that has to do with the strategy that you're employing. If you're a day trader, you should be thinking on the short side, you know, at least as long as these lower highs are respected and these resistance levels are respected, then it would make more sense to be on the short side as a day trader. But keep in mind, as a day trader, your profit targets are going to be tiny compared to what a swing trader would be looking for. As a swing trader, this is a very bad spot for shorts. Okay, I mean, it's aggressive because you're shorting into a support area. The 38 to 40K area is an important support. Just looking back, right? Just going back to this low over here, you could see this old support. This is an old resistance, became a support. It's a support over here, And here we are, right? You had a price reaction a few days ago. This, in fact, was when Chairman Powell testified. If you look at the bullish pin bar here, and as I suspected, and I talked about this, it was an aggressive trade because you're fighting the short-term structure, and it failed at the 45K resistance. Now look at this candle here today. This candle is a sell signal, okay? So the lower high is established. Theoretically, we should see a lower low. If we don't see a lower low, then we could have a change in structure beginning. So what does this mean for swing trades? Well, again, I'm looking for, I would be more open to longs here. I don't short Bitcoin, so that's not even a consideration. But if you are into shorting Bitcoin, keep in mind you're shorting into a very risky low area. Now, theoretically, if this structure continues, you should see a break of support because support levels are more likely to break in a bearish structure, right? But don't lose sight of the fact that the bigger picture, this is an important support. So what that means is, if you're thinking bigger picture, you should be looking for the reversal. All right, I think that would be the higher probability thing to do, which is hard because it's confusing when you say, oh, but the trend is bearish. No, the short-term structure is bearish, not the trend. The broader trend is not bearish yet. So I would be looking for a reversal pattern in this area. And when you're faced with a situation like that, and the market is short-term, like bearish in the situation, then you should be thinking smaller time frame if you're into that. I don't want to confuse anyone, so I don't want to talk about day trades, but that would be more appropriate in terms of risk than swing trades. I just want to make sure you take that away. That's the point that I want to make. Now, the scenarios I was talking about in my analysis on TradingView was the higher low, okay, and the double bottom. Now, of course, the first scenario I talked about was the break of the low, right? 39.5K break, and we're seeing 38K. That's the first scenario because that's what the structure points to. It's possible you can get a failed low or a double bottom or a possible higher low in this area right here. And that's, as a swing trader, I would be very interested in some type of reversal pattern here because, now, here's the thing. If we get the reversal pattern over the next few days, if it occurs, that's an aggressive long because the structure hasn't proven itself yet. The structure proving itself would be a break of this resistance. So it needs to clear 45K. If price can clear that, so if you take the aggressive trade and price does this, then you're going to get paid well because you took an aggressive trade. It's riskier because the probability of the trade working out is lower. But if you get that, now you're involved at a very good price and a change of structure, okay? But if this structure doesn't change, these aggressive longs are very likely to get stopped out. The more conservative thing to do would be to wait and do nothing until this resistance breaks. And then after it breaks, you would then look for the higher lows. That process can take weeks, okay, to unfold. It could take like a week or two or whatever. So you have to keep that in mind. You have to be very patient with this and have that broader perspective if you're thinking of swing trading. A lot of people, they just don't have the perspective. And they're just reacting to whatever they see and jumping into this and jumping into that. Would you believe, here comes a rant. Would you believe I saw a video, right? Remember back in December when all these things were going crazy and the videos were coming out, Bitcoin's going to 85K, seasonality nonsense. If you buy these 3 altcoins right now, you're going to make millions. Early investors are going to make billions, right? Those were the titles of the videos. Back like in December, or especially like around the height in November, right? In this area right around here, that's when those ridiculous videos were coming out. Well, one of those morons, I saw a recent video, right, from the same guy. This guy called Bitcoin, said Bitcoin was going to be at 95K by this time based on seasonality, right? The seasonality of Bitcoin. The analysis was completely flawed. But my point is this. Now he comes out with a video, is basically still pushing the idea that Bitcoin's going to go to 100,000. Bitcoin, the structure here, like that's not happening anytime soon, right? Unless the structure changes. Stop believing this nonsense if you're like buying into that stuff. These people are selling hope. These people are selling dreams, okay? Especially the ones with the lifestyle hooks. right? If the guy is doing his analysis from his Lamborghini, you seriously need to run the other way, because they're full of, it's just entertainment. Think of it as like a cartoon you're watching, or you're playing a video game. It has the same value as that. Just something to keep in mind, okay? When I see these videos, they really bother me. You want to know why? Because here I am producing quality analysis. I'm trying to give you quality perspective based on what the market is saying, not what I think it's going to do, because I have no idea what the market's going to do. But the market is telling a story, and I'm interpreting that story. When the market changes, I change. That's what I do. And I'm always looking at the risk. That's all I care about. I don't care about the reward, because reward is random. Okay? It's the risk that you need to focus on. So here I am doing all this work, right, to provide nice quality and actionable analysis. And then some moron comes along who has no experience and sells hope, and he has 100,000 subscribers on his channel, and he's pushing people to his affiliate links and all that other garbage. And you know, and are people getting benefit out of those videos? No, the whole thing is a fake, right? The whole thing is just selling hope, and hope is a very common thing in this business. That's how a lot of these guys get away with it. You know, all of you here can be a fake guru. It's very easy. All you have to do is learn some words, perhaps read a book, or not even read a book. You can watch some videos, learn the words, put some stuff on a chart, make the chart look fancy, put some affiliate links, and you too can be a fake guru. Okay? And people will believe you. That's how bad this is. That's really bad. Back in my day, when I was trying to learn this stuff, you had to have like you had to have some sort of professional background to if you were going to be an authority. You had to work in the industry or something. You had to be an author of like a book that was published by a real publisher. Something, right? Something. You had to have something. Today, you don't have to have anything. So anyway, all right, that's my rant on that. So basically, Bitcoin, again, lower high, expecting the lower low. If we don't get the lower low, then that's the sign of the change that this structure could be changing. Now, a very important point to make about this as well is the interest rate environment, because I suspect that is going to have an effect. I could be wrong. Okay, but we're going to a rising rate environment. We have not seen that in many, many years. A lot of people are shrugging it off and saying, yeah, it's no big deal. It's no big deal. Well, I think it is a big deal. And I think people are underestimating the effects of rising rates, because we haven't seen them in so long. Everyone's just too busy. They're all drugged up on hope, right? And optimism. You need to be objective and realistic, not hopeful and optimistic. Those things will not help you in this business. And by the way, everyone that's so generous with their, oh, look, we're going to give you all these free tools. Oh, we're going to give you this. We're going to give you that. They're making money on your fees. They're not vested in your performance. So they don't care if you win or you lose. They don't care, because you're paying fees. And that is how their business model is. That's what the business models are based on. It really pays to understand the business models of a lot of the players in this business, whether it's a fake guru, an exchange, whatever, right? A software provider. It really helps to understand their business model and how, where they're getting their money from, because it will put into perspective what they're giving you. And if a fake guru is giving you they're pushing some kind of high win rate system. I'm going to show you the only 5-minute candlestick strategy that you will ever need, right? Those kind of guys. I see videos with those titles all the time. If it truly worked, they wouldn't be offering it for free. They would be charging you for it, or not even sharing it at all. That's the nature of this business. So anything that people are just giving away, right? Some kind of magical strategy, or you know what they have? The ones that have the ads, like the YouTube ads, they'll be like, yeah, I found this weird little trick. Does that sound familiar to you? I found this real little trick, and oh yeah, look, I just made $1 billion in like 5 seconds. Wow, I could show you this weird little trick too. Just join my webinar that I'm going to have in 2 minutes, and I'm going to share with you how I make $1 billion in like 2 minutes. It's really cool. Yeah, I'll see you there. Does that sound familiar to you? Okay, anyway, so let's get to your question. This is my Bitcoin analysis. Let me know if you have any questions about it. And other thing, some great things too that people were giving me as far as my answers in the homeworks. They were referring to Bitcoin as the main gauge, right? For if they gave me like an altcoin. That's great. I'm very happy to see that, because you need to be paying attention to the main market, like in this case, if you're involved in an altcoin, because this thing is going to affect the altcoin. Anyway, all right, so let's get to your questions. Enough of my ranting. I talk too much, I know. All right, so let's get to the questions here. So Stian, all right, good to see you. HS, all right, I said hello to everyone before. So Alex, should I sell? Alex question here. Should I sell some Cardano from inventory today, or should I target at least $2 for inventory? All right, let's take a look at Cardano. Now, before I even look at it, Alex, I would say this. If it's at a low, I mean, okay, oh, nice. All right, it's not at a low. We got a hype coin here. Okay. Now, here, this is interesting. So I'm glad you bring this up. Because, you know, I've been pretty hard on Cardano. I think it's a completely garbage coin, and I think it's just all hype and everything else. But look at this move. Bitcoin is poised to go lower, and this thing is testing a resistance, right? Look at this. That's interesting. So this right here, what you're looking at right here, is the change in structure that I would be anticipating in Bitcoin. Notice it came off the supports. We talked about this, right? What was I saying when people ask me about Cardano? Even though I give it a hard time, we agreed that this is a supportive area, okay? The structure is bearish, but now the structure may be changing. Look at this. You have a double bottom, or basically a failed low. This is a failed low. What a failed low is basically something that goes slightly lower and shakes a lot of people out, but and then reverses pretty much right away. That's a failed low, because it went slightly lower than this low area here. Okay, there's actually a percentage that you could measure on that. I'm not going to get into that here. But that's a failed low. And since that failed low, which that's a high risk trade when you get the buy signal, but when it works, boy, does it work, right? Okay, so I suspect that this is on some kind of news or whatever, some kind of hype, or whatever, right? That doesn't really matter because I don't follow news. Now here's the thing. So I'm looking at the structure. Double bottom, basically, failed low, testing resistance pretty quickly. Ah, that's interesting, all right? That's a sign of strength. Now, has it proven itself though yet? Has it broken the structure? No, it needs to clear this, all right? It's on its way. It looks like it has a good start here. So to answer your question about selling inventory, I mean, if you're in from a really good price, I don't know where you're in from. I mean, inventory should be thought of as long term, right? I don't know when you got into the inventory. If you feel comfortable locking in some profit, this would be more appropriate for swing trades, right? That would be a great place to take profits. Inventory, I mean, you want to be looking at like retail prices, right? These aren't retail prices. I'm going to show you this area right here. That's like retail, right? That's the midpoint of the range. I mean, I think you can give it that chance for inventory, I think. Now, you are fighting against a bearish Bitcoin. So I don't know how long this move is going to go. So you have to decide. I think the best thing to do is maybe, if you want to give it more of a chance, because there's no sell signal in this thing yet, it doesn't hurt to take a little off the table. All right, maybe you take 5% off or 10% off just to lock something in while the herd is there willing to take it off your hands. And or maybe you want to sell that 5 or 10% when a sell signal appears, right? You want to unload a little bit of that inventory when the sell signal develops. And that sell signal that I'm referring to could be, here, hold on. It could be like a bearish pin bar or something like right there, right in this area here, right off of that resistance. Does that make sense? So if you get something like that, that would be a signal to actually sell, and that would be a good reason to take a little more inventory off the table. Just something to keep in mind, okay? But inventory levels, you really want to be looking for ridiculous prices, because when you're dealing with inventory, you're looking to hold on for longer term. So this is a potential resistance, and again, just to be clear on answering your question, it's not a bad idea to take a small bit off. That you could do that in this situation right here, or if you want to give it more of a chance, which is okay because this is a nice structure developing, then maybe you wait for a clear sell signal, like a bearish pin bar or an inside bar and break of low, and say, okay, I got the sell signal, now I'll take some off. So you have to decide which situation is more appropriate for you. All right, so thank you for asking, and thank you for bringing this one up, because this one is a real, this is a hype coin. And, it's never a bad idea to take profits when, at least something, when you have them from a good price. So nice job. Nice job on your inventory. All right, Kai. Hey, Kai. Dollar index. All right. Kai, one of my new students. Dollar. Let's take a look at the dollar index. Why am I putting USD after the dollar index? Let's take a look here. So the dollar index, as you can see, and I watch this dollar index regularly. It's an important economic gauge, as well as, used for other reasons, for trading like Forex and stuff. This trend on the dollar, there's no question. It's higher lows and higher highs, right? Generally, broader trend. But now look at this situation here. So we have this old resistance, which became new support, as you can see. We all know about that, guys. But we have this support break right here. Now, what does this mean? Now, this first support break, that's somewhat notable, but it hasn't changed the trend yet, okay? It's possible that this trend could be changing, but it's also very possible that this area right here, right, this old resistance, new support, it's very possible that that becomes a higher low. So we have to see how this unfolds. Now, if that becomes a higher low, then it should develop into a higher low in a rising rate environment. That's what we should see. Maybe price bounces off the support again or whatever, and then it starts to, it continues the broader bullish trend, right? Something like that, double bottom over here. But if we don't get that, and instead we get a lower high up at this area here, right? The old support, which is now likely to become a new resistance up in here. We get that, and then it breaks the support. Now, that would be an important piece of information. I find it hard to believe that it will do that with rates rising, or that, the rising rate coming. I find that hard to believe, but hey, anything is possible. You have to keep an open mind no matter what. If the structure says something, then you have to believe the structure, not the economic news, right? The structure is the reality. And the dollar had changed months and months and months before Powell changed his tune, right? Which tells you something. The insiders are on this stuff way before anyone else, because I'm sure Powell has many friends that run hedge funds and banks. So just something to keep in mind. I don't think this is bearish yet, but it could be changing, because as we know, supports should be respected. But this support, while it is broken, may not be a whole change of trend, right? This may just gyrate around a bit. We have to watch this area here, the 94.08, so basically 94. If we get the lower low, then that would be a clear sign of a corrective structure. And then that would also be a sign of rates going lower, or inflationary pressures, right? Which it's hard to believe, but if that's the reality of the market, then I will believe it at that time. I can't make that judgment yet. So does that make sense? So if you're looking at Forex pairs, okay, I would still be bearish on Forex pairs like euro, pound, and all those things until this chart changes. All right, so there may be some buying, there may be some selling opportunities in something like the euro and the pound. So keep that in mind. And they're usually inverse to the dollar, right? I mean, the chart patterns are usually they look like the dollar, just inverted. So yeah. All right, let's see what else we got. So good question, Kai. So again, thank you, Alex, for buying my ebook. So again, the ebook it's basically an introduction to the components of the methods that I use. Just to be clear, the contrast to that, when you're in the training program, I'm giving you feedback to make sure that you're understanding those components clearly and using them properly. Sometimes we assume that we know something or we're doing something right, and when you don't get any feedback, you may be missing an important point. All right, so the ebook was meant to be an introduction, while the training program is to actually get you to develop hands-on experience and a much stronger understanding. All right, Chris, hey, good to see you. Okay, from Imitiez, where are you from? Okay, nice. From Doha. I don't even know where that is. Cool. Thanks for stopping by. All right, cool. Hey, good to see you. Doji wants to see Dogecoin. All right. There's Schwartz. I knew Schwartz was coming. All right, let's take a look at Dogecoin, international man of mystery. I can't run one of these streams without my international man of mystery. All right, here's Dogecoin. I haven't heard from this one in a while, right? Now, do you guys remember all the hype on this nonsense? Do you remember? Right? Dogecoin is going to do this. Elon Musk is going to accept Dogecoin for his cars and blah, 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 blah. All blah, 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 right? Look at this. Now, is this range bound or what? Bigger picture, I mean, we can still argue that the bigger picture is bullish because this range low is still a higher low. Yes, it is. But the short-term structure is clearly consolidating, right? Consolidating. In fact, no one gave me Dogecoin as an example. I got some other interesting examples, but Dogecoin would be a good example of a short-term structure that's range-bound. It's not making higher highs. It's not pushing lows. So what do you do with something like this? Well, something to keep in mind, you know, this is obviously a meme coin. It's a junk coin. And if the space really gets hammered, and again, we're going into a rising rate environment where typically highly speculative instruments don't perform well, this is one of those type of instruments, right? It's completely speculative. It's complete garbage. The thing provides no real actual value of anything. It's just all hype. So keep that in mind. I wouldn't treat this as any type of quality asset. If it breaks this support, what is that? 15 cents, just over 15 cents. If it breaks that support, then you're probably going to see bearish momentum continue into the next area. And that area would be here, right? That would be your next area right there. That's around 7 cents. That's like what? A 50%, like a 50% cut, 50% reduction. So watch that support area because again, it's been touched many times. There are probably a lot of longs in this thing, being hopeful. As we know, hope is not a strategy. I'm sure you have hundreds of fake gurus. Yeah, buy Dogecoin. Yeah, just hold it. Just hold it. It'll come back. Yeah. Don't worry. Trust me. It'll come back. If this thing breaks, you're going to have a lot of people stuck in this thing. Okay? So that's what you have to watch for. If you don't have any, I would not get involved in this. There are other coins. I mean, look at Cardano, right? That's an improvement. Cardano. This is not an improvement. So there are many other coins and other opportunities to get involved in. If you're in this thing, then I would measure my risk from that break. Okay? And I certainly wouldn't be putting on more, especially based on the type of environment that we're going into. Does that make sense? So that's Dogecoin. Thank you for asking. Stay in. Could you have a look at OMG? Sure. Stay in. I think I'm getting your name right now. Stay in. All right. USDT. So let's see. OMG. Now again, this one also, look at this interesting nonsense. Look how it failed up in here, right? And then the thing got hammered. That's why I always warn people not to buy highs. This thing got hammered hard. Now, let's talk about where we are now. So as you can see, the recent price action, I mean, what would you call that? What would you call that, staying? I mean, you don't have to answer it right now, but obviously that's a consolidation and potential lower high because price has yet to take out any resistance levels. So while the broader trend, here, let's take a look at a weekly chart. While the broader trend is arguably bullish, right, because it does have higher lows and higher highs, this recent leg is not pretty, right? It should not have, for one, gone that low, all right? Like it took out this was an old resistance area, right, in this area here. And you can see it tried to have support, but then it broke it, right? Should not have done that. So a lot of people got caught in this thing, right? And they banged it out or whatever. If this thing gets back up into this area, it's probably going to be a resistance. So you're facing something that is likely to consolidate. Now, so as far as like new trades go, I would wait for a structural change, and you don't have that right now. You need resistances to be broken, all right? And your first resistance would be here. As you can see, it's trying to reject that resistance. What's that price? $7? Yeah, about $7, and it's rejecting that. Of course, Bitcoin is doing a similar type of rejection. So I would not be involved in this. If you're an aggressive short-term day trader, that's a sell signal for a short. But if you're going to short something, there's so many better things to short than these coins, right? These coins are very problematic. So, for a lot of reasons, especially because they can get hyped out of nowhere. So yeah, that's what I think about this thing. If you're interested, let this resistance break and then look for higher lows, because the resistance break would be the beginning of the change of this. Because look, you had the bearishness, the lower highs, lower lows, right? You failed to go lower, trying to change. Okay, it's a start. Keep in mind, the transition, when trends transition, right, this is not a binary thing. They don't go from bullish to bearish, as you know. They can go into these type of consolidations, which is fine, but just because it consolidates doesn't mean it's going to reverse to bullish. This thing may break the support and continue to bearish, right? That may happen. So if you're gonna buy this thing in this configuration, at least wait for a test of the low, at least, and a buy signal there, right? That would be your best bet, and I would still consider that aggressive. And that's for a swing trade I'm referring to here. Does that make sense? So that's OMG. Not much to do there with that thing. All right, so thanks for asking. Hey, Nita, good to see you. Haven't seen you in a while. Matic. All right, let's take a look at Matic. What's going on here with Matic? Matic, MATIC, USDT. Okay, now, nice example. And people actually sent me this example a few times. This is a broader bullish trend, higher lows, higher highs, right? Okay, going up to this high over here, right? Okay, great. Now, since then, the market pulled back, produced a higher low. Okay, that's fine. And now you have this. What is that? Not only do you have that, but look where it developed. That's a lower high. That's not what you should see developing if this thing is going to be strong. So you may have now a potential lower low coming, right? That may be what's ahead. If that's the case, then the structure would start to act more bearish. Now you can even argue that there's a lower high over here, right? You got the lower high, lower low, lower high. Theoretically, this thing should make a lower low. If it fails to make a lower low, somewhere between here and this low, then I would say the broader trend is still intact at that point. If it can't go much lower than this, if it fails to break, right? Or if it goes slightly lower and holds, then you're basically looking at the failed low and the broader trend is still in play. That would be a reasonable signal or buy signal to go for, a long, if you get the double bottom or something like the higher low in that area. Does that make sense? If you don't get that and this thing breaks, stay away from this thing, and most likely the rest of the altcoin space will probably be doing something similar. Most of these coins don't really do their own thing. Some of them do, but most of them don't. Now, understand something. When I talk about these scenarios, I'm laying out potential scenarios that can happen. A lot of these morons out there that do analysis, they speak in absolutes. So when they see something like this, right, they say a lower high. Oh yeah, this thing's in a bear trend and it's going to go a lot lower. And I'm going to do a projection and this thing is going to go to this low over here over the next month. That's what I say it's going to do. If someone says that, turn them off, please. Because there's no way to know if this thing is going to break this support in advance or hold it. Now, theoretically, it should break if there's a lower high, right? Should lead to a lower low. It's all about if. If the market gives you another piece of information here, meaning the market says, no, I'm not breaking, I'm reversing. That would be a double bottom, failed low, within the context of a broader bullish trend. That would be a long. So the trader mindset is not the same as the analytical mindset. I talk about that a lot. The trader mindset is about understanding what I just explained and adjusting to what the market says, right? Being a market listener, you have to be a very good listener to be in to do well in this, right? It's my opinion. You have to be a very good listener. It's almost like a dance, right? In a dance, in a partnership, a structured partner dance, you have a follower and you have a leader. The leader moves the follower around, and the follower must have an open mind and follow. Otherwise, it doesn't work, right? The market is the leader. You have to be the follower. All right, so that's Matic. Thank you for asking. Nice chart. All right, so let's move along here. Alex, any feedback after Powell hearing? Oh yeah, Alex, so you had asked that. You know what? Do things really look that bad? I have not listened to Powell. I told you I was going to, and I just haven't had a chance because I've been really busy. I just go by the price action. I mean, that's the primary thing I look at. I knew he was speaking, and really, what I normally do, I was just going to look up his speech or whatever, just so I can answer your question. But normally, if you had not asked me, I wouldn't even pay attention to what the guy says, because what these people say hardly reflects the reality, and there's a reason for that. What people like him, they're not going to tell us the truth. They're not going to tell us what's really going on in the world, right? Because there are other agendas in play that there's no way to know, right? So, for a while there, look, let's think about this for a moment, just as far as his way of sharing information. For the longest time, what was he saying? The inflation is transitory. Yeah, it's a word I made up to sound smart. Transitory. Yeah, don't worry about it. If you can't touch it and you can't taste it and you can't feel it, then it's nothing to worry about. Okay, it's transitory. Don't worry. And then what does he say in November? We need to get rid of that word transitory. I was just joking. It was a banker joke. When you're a Fed banker, when you're an economist or whatever, it's just funny. I thought it was funny, but okay, people aren't finding it funny. Anyway, we need to get rid of that word transitory. And I was wrong, right? And now in December he comes out and says, yeah, we're going to have to raise rates because I was wrong and we have inflation. So that's what I mean. Why does he not know what's going on? He's the head of the Federal Reserve. Does he not have the right information? No, of course he knows what's going on. There are other forces in play. Of course, he has friends and he has political situations and things like that. That's why you have to go by prices, because price is a discounting mechanism and it discounts the future. Smart money, friends of his, hedge funds, banks, other, what I'm talking about, institutions, right? They know what's really going on. They get the inside information and they're going to act on that information. When they do that, they leave footprints. And that's what changes the trend in the dollar, for example. Why was the dollar rallying? Why did the dollar rally start back in August? Why? Powell wasn't talking about this stuff back in August, but the dollar knew something, right? And we saw that dollar chart. So that's what I'm talking about. So don't listen to these people's words. They're not there looking out for your best interest. And you say, but why would he lie? It'd be bad. No, they're just trying to appease certain things. We don't even understand their world. I have no idea what that guy is dealing with, okay? But he has certain things. He's going to put things a certain way, and he doesn't want to make the market too uncomfortable either, right? Because it makes everyone look bad. So understand that. They lie. People lie. What do I tell people, right? On my what does my website say? Don't listen to people. Listen to price, because price can't lie. Price is reality. That's why it's so important. Stop paying attention to these people. Okay, him, you get these professional like, I'm an expert economist or hedge fund guy, or I've been in the gold business for 50 years, and all these people in public places so generously sharing their experienced opinion and blah, blah, blah. It's useless. It's entertainment. You're watching a cartoon, okay? So I'm not yelling at you. I just want you to understand that's my answer. Like, I don't know what he said. So you know what I do? Here's what I do. I say, okay, all right, Powell spoke today. Let me look at the S&P. What does the S&P think? Because the S&P is not going to lie to me, okay? What's the S&P think? Well, the S&P so far it's a little nervous because we have a lower high right here. So the S&P is unsure, okay? But there are higher lows everywhere. Look, higher low, higher low, higher low over here. So right now, the S&P does not look bearish at all. There's nothing bearish about this. Yes, we have a lower high, but that doesn't guarantee we're going to get the lower low. And look how buyers have been fighting. Look at this. Look at those tails. So at this moment, whatever he said isn't bad, really, right? The S&P is not worried about it too much. I don't see the S&P breaking any major supports, right? That's all I look at. And I look at the dollar and I look at the bonds, right? Bond market, ZN1. What does the bond market say? Ooh. Now, the bond market tells us an interesting situation. Now, here's what I mean. Just consider this for a moment. We looked at the dollar broke a support. We look at the S&P is holding support, okay? So you would think that if things were pretty bad or rates, with the rising rates, the S&P should be breaking supports, but it's not there yet, right? The fear isn't there yet. But look at the bonds. This right here in the bonds, this is rising rates. Look at this. Look at this. Bearish structure, lower lows, we're breaking supports. So no matter what Powell says, someone is still selling bonds, okay? Someone is still selling bonds. Who trades bonds? Banks, governments, the Federal Reserve. They trade bonds, asset purchases. They refer to them as asset purchases. That's how they stimulate things. When they buy bonds, right? They buy bonds. They're putting money into the system. When they sell bonds, they're taking money out of the system. Right now, they're taking money out of the system. And this has been going on for a while. So just something to keep in mind. Listen to the bonds. The bonds are much more honest than Powell. Anyway, good question. Got me excited there. All right, let me see what else we got here. So, okay, hold on. I'm going back to the chart, just catching up. Oh, I got Schwartz, International Man of Mystery. So glad to see you. My head Romanian. Got Dan. Hey, Dan, good to see you. Thanks for stopping by, Dan. Alex, the interest rate was rising through 2015 to December 2016. And that, okay, no, but hold on. That's the whole Bitcoin thing. It's a good point you bring up, Alex. The whole Bitcoin thing, first of all, was retail driven from 2015 to 2017, not institutionally driven. Retail traders have no clue what they're doing, right? And they're just throwing money at anything. That was a complete retail market. After 2018, the institutions got involved. Now things change, right? Companies are buying Bitcoin and they're putting it on their balance sheets. That changes things because now Bitcoin is going to act more like the S&P. When it was back in the day when it was just retail gambling, that was a different story. Okay, so we had the 2015 to 2016. I don't think you can count that. 2016 on, we've had bullish activity in all the markets. Okay, and then what happened? 2020, they had to stimulate hard. And that's where we got all the bubbles from. So don't go by that like, oh, rates were rising. Rates were not dramatically rising back then. I mean, I don't remember. In fact, I don't really remember much talk about rates rising back then. It wasn't really that big of a deal. But we had a lot of political changes taking place. And there was a lot of optimism in terms of how the economy was going to expand and all that kind of stuff. And the markets were near lows. I mean, let's just take a quick look, right? You bring that up, S&P. Let's take a look at S&P 2015, right? Let's take a look at S&P. Let's go back. Where's 2015? So when we go back, I remember those years, right? Look at the S&P back then. The S&P was just slowly, incrementally going a little higher, and it was at highs. And then we had a change in 2016. And it broke that consolidation and then just continued higher and higher from there. That is going to, people are making money in that. People that have, they're invested in their portfolios and blah, 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 blah. And so there's money floating around, right? It wasn't like the S&P was getting hammered all day long. There was money floating around, and that's going to contribute to the retail activity in something like Bitcoin. Does that make sense? All right, so I hope that gives you perspective there. Good question. Let's go back to the chat here. Hey, okay, X, no problem. Good to see you. All right. Oh, from India. Welcome. Okay, Ing, ZIL. Let's take a look. ZIL USDT. What's going on here? So, okay. Now, the bigger picture, let's start out. Actually, let's just take a quick look at the weekly. So look at this, right? So the bigger picture made higher highs up until what is that? The May peak, right? Around May. Since then, it's been garbage, right? So obviously it was hyped. People got caught. So you could say the midterm and short-term trend, like the midterm trend is range bound, right? That's your range right there, those two lines. And the short-term action, right? What do we see here? Lower highs, right? Lower highs. This is another lower high, although it tried to start to break some resistances, hasn't really performed very well, and it's trying to actually establish another lower high right now. So it's a consolidation, and it's a tough spot. If Bitcoin breaks, right, this thing is setting up to break lows. That's what this thing, lower highs often lead to lower lows. If this thing cannot break lower lows, if this thing continues to hold, especially this, I mean, it's in the area right there. If it makes the lower low and clears that area, what is that? Just above 5 cents, right? If it clears that, you're looking at lower lows. And I would stay away from this thing. If it starts pushing these prices here, I would stay away from this thing if you're not in any. If you're in some and it breaks that, you need to decide how much risk you want to take, right? Do you want to hold this thing to zero? Do you have too much of it? Perhaps it might be a good opportunity to lighten up on some in that situation. I'm not a big fan of unloading at lows, but the thing is, these things are not exactly, this is not a bullish trend, right? This is not exactly, there's no strength here. Money is not coming into this thing. So you just, at this moment, you have to keep that in mind. So there has to be some sort of risk control on your side, because there's no way to know where these things are going to go. They're highly speculative. Most of these coins are junk. You have to realize that. These are not blue chip stocks. So you need to have some form of risk control. So perhaps if it breaks, you unload some, if you want to hold on to some, and wait until, if you want to get involved, wait until the structure changes. All right? Let resistances break first. And then when they start breaking, you get like resistance break over here. When they start breaking, that's a sign of change. That's a sign that, okay, money is coming back into this thing. Like that Cardano chart. That Cardano chart is a perfect example of a change in structure that wasn't there a week ago. And there's no way to predict if you're going to get that change in structure. The market needs to provide that information. Okay? No one knows in advance if it's going to do something like that. And a chart can't tell you that. A chart can say, hey, look, we have evidence that a trend is taking place, or a change in trend is taking place, and now we can readjust our expectations. And the market should behave within the scope of our expectations. If the market does not behave, then we have to readjust again. And so what is this market doing? Is it breaking lows again? And what does that mean for me in my position? Should I get out of some more? Right? These aren't exactly coins that I would be dollar cost averaging into, by the way. If you want a dollar cost average in this space, I think Bitcoin or like Ethereum are good choices because they are the leaders in the space, not these vague, useless garbage coins. All right? These are not investment grade vehicles. So if you don't have any, nothing to do here. That's my point. All right? If you don't have any, wait this thing out. Let this thing break first. Let the market make the first move and then adjust from there. Does that make sense? Something to keep in mind is a lot of times, people want the best price, right? So I want the lowest price. But the lowest price can be extremely costly because the price can break and go lower and lower and lower. So a more conservative thing to do, or a more effective thing to do, is let the structure change. You're not going to get the lowest price, but you don't need the lowest price. You want the structure to be in your favor. You want this thing to start going your way, right? So it doesn't matter if you don't have the best price. You just need a better structure. Does that make sense? Okay. Oh, what's this? Visionary sent me 100 coins on TradingView. Thank you for looking at Ford stock on YouTube. Always love your Ford. Oh, okay. I'll take a look. I haven't looked at it yet, but thank you. Thank you, Visionary. I'll take a look at Ford now that you mention it. I appreciate that. Thank you so much for the TradingView coins. You don't have to do that. I'm going to leave that message up on there so that I don't forget to take a look at Ford. All right, so that was Zill. Hey, Mr. Banian, good to see you. GLD, NZK. Hey, oh, Chris. Hey, good to see you, Chris. thanks for stopping by. Adrian, hey, thanks for stopping by. Hey, Kamal, good to see you. All right, cool. Another student, thanks for stopping by. Kamal, hope all is going well. I'm waiting to see your next assignment. Alex, are you ever looking at Bitcoin funding rates? It has become slightly negative. Actually, Alex, you know what? That's a good thing you bring up. I have not. I think that's an interesting thing. I would like to look at Bitcoin funding rates, because if there's any valuable information anywhere in some of these extra pieces of information, funding rates would be an interesting piece of information, because that's interest rates, right? And that affects how, the cost of money. And that would be interesting to me. So I'll have to take a look at that. Funding rates. Thank you for bringing that one up. I mean, like, usually when people ask me about like things like the Bitcoin long short charts or some of these other Bitcoin dominance charts, my answer is I don't need the extra layers of complexity, right? I just have price, I have structure, I have a few of these other things that I look at, and that's all the information I need. My goal is to make decisions on less information, not more. More is not better in this business. The reason for that is because everyone is trying to rob you. So the more information you have, it's usually not good information, and it stimulates more trades. All of this leads to more fees and costs and losing trades. So less is more. Keep that in mind. When it comes to this, less is more. It's human nature to believe more is better. It's not. It's also human nature to believe that maximizing profits is the way to do better in this game. It's not. Being defensive and protecting capital is the effective behavior. That's the whole basis of my training program, actually, is to be defensive in your thinking. Not, how do you maximize your profits? Because I want to turn my $1,000 account into $20,000 in a couple of days. That's possible, right? No. All right. I mean, anything's possible, but the amount of risk you'd have to take to do something like that would be unrealistic. Okay, Adrian, what about Helium? HNT. Oh, wow, Helium. Okay, that's an unusual chart, Adrian. First one asked me about that. Let's take a look. Let's take a look. I haven't done my Seinfeld impressions in a while. Let's take a look at Helium. Interesting. Oh, okay, so it's Binance. All right. Let's see what's going on here. Nice general trend. So you guys that are in the program, step one, trend, right? That's pretty clear. Now, like I said, you can break the trend into 3 time horizons. The longer term trend is bullish, but the midterm trend here is, we can say that this is more like range bound, right? That looks like a consolidation. We don't have a higher high, but we're not exactly making lower lows either. We have this corrective move, old resistance, new support, but since then we're sort of in the middle of that range, okay? So we can argue that this is a consolidation. Okay. Now, so with that being said, if you're in a broad higher low consolidation, and in the short term structure here is somewhat bearish because you have this lower high that just developed, but that's going to carry the least amount of weight in the eyes of the broader trend. So what do you do in this situation? If you're interested in a swing trade, you wait for this area right here. It's not a bad looking chart, right? And you may get the high or low at the current price area, but look at the current candle. The current candle is showing a sell signal. So no reason to do anything here. It tried to give you a higher low, right? And it give you this little failure. It's just gyrating around. The higher probability location will be this area right here. So you prepare for that. That's what you're anticipating. So if price gets there and you get a buy signal in this area, if you're going to take a chance, if you're going to put on risk or assume risk, this would be the better place to do it. Of course, you would need confirmation, right? I talk about that a lot. You don't just jump in. It's amazing. I asked the question to people, do you think it's a good idea to place limit orders, or is there any advantage of placing limit orders at these levels in advance? And the answer is no, okay? There's no advantage. All these levels are random. So you need to wait. It really is more effective to wait for price to confirm that other people are stepping in before you step in on something like that. People all the time make that mistake. They just, it's at the support, I'm just going to buy it. And randomly it works out. We don't want randomly, okay? Randomly is not helpful because you can't make money randomly, especially when you add the liability of human nature to the situation, because you're going to hope more and you're going to take profits faster, right? And you're not going to make money that way. So you need to think ahead of the herd, and you need to wait for things. Waiting is a big thing when it comes to timing. Waiting. A lot of people can't wait. They have no patience. If you're like one of those type of people, you get out of this game now, really, because waiting is a very important skill. Is it really a skill? I mean, who doesn't know how to wait? It's not about not knowing how to do it or do it. It's having the patience to do it, okay? Learn to wait. All right, anyway, good question about Helium. Mr. Banian, how do you see the housing market connected to the rising rates? Yeah, that's interesting. You know, I was talking to someone about that, and I'm not a housing expert, all right? And I certainly don't pay attention to other housing experts because I believe that no one knows anything, just like the financial markets. So I suspect that in a rising rate environment, if anything, the housing market will be under some kind of pressure. But you have to understand, homes are driven by their locale. So, you know, the demand for homes are really going to depend on where they're located. You know, if you're in the middle of nowhere, those homes will probably suffer more than if you're trying to buy a home in, you know, in one of the boroughs of New York City, or, you know, that kind of thing. Or you're buying into, like, in an area in a popular city. Those homes are probably not going to be affected as much. But theoretically, if rates are rising, the cost of borrowing money will increase, and it's going to be harder for people to get loans, which should put pressure on the demand, the general demand. So that's what I suspect. And the way I would treat something like that is, you know, if you're looking to buy a home, I would keep that in mind. Like, prices are, if the agent said, oh, you know, buy this home and, you know, you'll be able to sell this thing for, you know, $50,000 profit in a couple of months. That's how it works. And I would not be too optimistic about that, right? There's probably, instead, I'd say, look, I'm going to price in the rate cuts now. I want this thing for 10% off, right? We can't do that. Anyway, all right, so that's how I would treat something like that. Again, I'm not a housing expert, but interest rates do have a major effect, and I'm curious to see how they affect things once the rate process starts going. Now, I don't know if Powell, I don't know what his plan is as far as, is it going to be raising rates by 25 basis points, by 50 basis points? Like, I don't know what his plan is on something like that. You know, he's probably not going to go in too hard and too heavy because there's a lot of vulnerable people, right? And he would make a mess of the markets. And of course, I don't think it's probably not in his best interest to do something like that. So he's probably going to be slow and as careful as possible. All right, so we have to see. Anyway, that's my thing on that. I keep an open mind. I don't have any, you know, I have my theories, but I don't sit there and think that I'm right. Okay, I could be wrong. So we'll have to see how that plays out. But I certainly wouldn't be overly optimistic about prices rising. Okay, so good question, Mr. Banian. Oh, Romania, another Romanian. I didn't realize you were in Romania. Okay, I'm very popular there. But probably will be a worldwide. Okay, I am planning to buy a house, and I'm looking for a good moment. A bit scared as the construction materials are. Oh, yeah, right, Mr. Banian. Inflation. Of course, you know, now the European situation is not exactly the same as the U.S. So, you know, I don't know exactly what the euro rates are, and you know they do things kind of differently in Europe. So again, that's going to be very specific. That's going to be very location specific. So you might want to, you know, work on. I wouldn't know what to tell you about that, but all I know is, I mean, just in general, if rates are rising, it should have a negative effect on prices, which means, you know, you should just basically say, look, I want this price. I'm going to price it in now. I want it for a lower price. Don't give them what they want, right? You say, this is the price I'm going to give you. Take it or leave it. All right. Anyway, thank you for a good question. Another Romanian. I didn't know Romania. There was so much housing stuff going on over there. I don't know much about the Romanian economy. Even though I have a lot of Romanians here, I should probably look into that. Hey, Christian, Adam, yes. Thank you, Christian, for stopping by. I know you asked it in the other chat, and I asked you to put it in here because, you know, I forget. And And I'm glad you came in here and put that. So let's take a look. Now, Adam has been strong, right? It's been relatively strong. Let's take a look at the weekly real quick. Now, look at this situation. What do you guys see here? What do you see? Can you guys tell me? I'm not going to wait. Like, you guys, you could just put it in the chat now. But what do you see here? What is that? The general trend here, higher low, higher high, blah, blah, blah. Okay, but we have a double top in play. If the low of this current candle is taken out, that's the weekly, right? Not a good place to be buying. Certainly a high risk place for longs and people getting stuck in this thing. So if you're long, now look at the current daily candle, right? What is this here? This is a failed high at a clearly defined resistance. This is a sell signal. Once we take out the low, look how it gave it back. Look at the attempted breakout, green candle. See the green candle? We're about to take out the low. That's a sell signal. So if you haven't taken profits on this thing, if you have it from lower prices, this would be what you want to see as far as a solid sell signal to lock in something, right? You don't have to blow out the whole position. I mean, maybe this thing finds a higher low and it continues, right? You have to be open to that, but you have to decide how you want to manage that situation. But that is a clear signal. That is a clear prompt. Get out. Take something off the table. It failed. Not only has it failed relative to this resistance, but look, it failed relative to this resistance as well. This is not a good place. So forget longs. It's definitely not a long. If you were into shorting, this would be an aggressive short. I don't recommend shorting these things, but there is a sell signal developing. If you have profit from lower prices, good reason to unload 40 or 50% of it, in my opinion. And that is if you want to give it a chance to continue. Keep in mind, if the sell signal follows through, you're looking at breaking these supports. What is that? 32.90? So 33, that can easily break, especially in the face of a weakening Bitcoin. It's very possible. So something to keep in mind there. Don't get stuck in hope mode and be like, well, you know, it's strong, it'll come back, it'll come back. If it breaks those supports, you know, you need to make an adjustment, I would say, right? That would prompt you to make even further adjustment. But this is your opportunity to lock in something if you have something. Does that make sense? So thank you for asking. It's a good question. All right, let me just move along here. So that was Adam. All right, can you give Vet some hard time? Okay, Vet, sure, let's take a look. Let's take a look at Vet. HS, who usually used to ask me about Vet. HS doesn't ask me about Vechain anymore. All right, that's okay. I'm just picking on HS. So now look at this thing. This is a perfect example of hype and garbage. Perfect example. I remember when this thing was all, oh, Vechain's going to do this, and early investors are going to make billions of dollars, okay, in Vechain. I don't know, not exactly. I don't know where the billions of dollars went. Maybe to the developers of Vechain, but certainly not to the investors. Look at this. Failed high in this area. Hype, hype, hype. Gave it all back. Okay? Tested this area here, and it's fooling around near a range low. So we can argue that this is a consolidation. The structure, the most recent structure is bearish. You have lower highs and possibly a lower low coming. Now, look at the current price action. You have the lower high over here, and looks like it's going to go for the lower low. So, as far as longs, not interested, right? This is, while the location is generally attractive, and we saw quite a few locations over the previous week. Many of these coins went to attractive locations when Bitcoin pulled back, and those are areas to consider longs, yes, right? They are areas to consider longs, except when they do this. Right? That's not what you should see. Now let's just kind of review this real quick. Vechain gave you a buy signal about a week ago, right? That's the buy signal right there. You see that? And many altcoins gave a similar buy signal. Bitcoin also gave a buy signal. We saw the pin bar in Bitcoin, right? That was Monday, and then Tuesday Powell came out, and everyone was having parties, and Bitcoin's going to 100K again, and blah, 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 right? Since then, you have this. That is not what you should see after a buy signal. This right here is a failure of momentum. Keep in mind, On that buy signal, lots of people pile in because they have no clue what they're doing. They're on the Robinhood now. Hey, the Vechain. I'm going to buy some Vechain because look, it's green. I'm going to buy it. Okay, and oh, why is it red? I'll just hold on because it'll come back. This thing was much higher. It'll come back. This is not what you should see. This is a lack of momentum. It's a failure. Lots of people are caught. So I wouldn't touch this thing. If it breaks this support, you should especially stay away from it. Now, what is that price? Around 6.0, just above 6.5. Okay, something like 689 there. 0689. So it's set up. It's got a lower high. It's setting up for the lower low. Nothing to do here. If you're interested in inventory, price really doesn't matter for inventory. It's really your size. But like I keep saying, these are not good choices for inventory. All right, so I can't really say much more about that. So does that make sense? So you have some warning signs here. Does it break the support? We have to see. If Bitcoin breaks 38K, I suspect these things are going to break their supports. And a lot of people are going to get shaken out as usual. Many of these coins are probably not going to recover very well because there's too many of them. And once the speculative bubble goes away, right, all that speculative money, once it goes away, where are these things going to be? Because these things are highly dependent on speculative money floating around. Lots and lots of them. I got so much money, I'm just going to throw it at anything. That's what these things depend on. Just like the Russell 2000. Growth stocks, high potential growth stocks. And those companies need to borrow a lot of money. A lot of them don't even make any money, but people throw money at them for their potential. When money starts getting more expensive and there's less of it, these things are going to be the first to get hammered. All right, that's the theory. You have to keep that in mind. I could be wrong, but you know what? If I'm wrong, the market needs to prove it. The market needs to show me strength. This chart is not strength. Does that make sense? Cardano, you want to, again, a good example, look at the Cardano chart. That's a sign of a change, right? If you're going to start buying something, if that thing can follow through and start breaking resistances, okay, at least you have a structural change, at least. This, not even close. All right, just to give you some contrast. Thanks for asking about Vechain. Hey, Kai, and lots of cousins too, okay? What do you think? Don't pay attention to stuff like that. That's just nonsense and entertainment. That's anything with moving averages is just a gimmick. And it's meaningless. Meaningless information. I have nothing to say about it. X, okay, again, no. It's random. Okay, a lot of people, they love using that gimmick because it gets attention. It's a gimmick. It's random. Means nothing. It's about the levels and the structure, not moving averages. Moving averages are an average of price over time. It's old information. All right, it only looks good when the market's in a clear trend. Let's go back to that Bitcoin chart real quick. All right, again, don't get sucked into those ridiculous gimmicks. I've talked about that, often. This, just because a moving average is crossing over, has no bearing on the fact that this is a major support area. Like I said before, looking for the bullish reversal. Now, maybe you don't get the bullish reversal, but the current structure at the moment is favoring bearish activity. The market needs to decide what it wants to do. Don't go by stuff like that. You will be thrown off badly, okay? So thanks for asking about that. Let me see what else we got here. Alex, I got ADA from, okay, and I was thinking about starting to sell after $2. Another part at $3, and some just to let it ride. Okay, Alex, no problem. You have it from a good price. It's not giving you a sell signal yet. You're at a resistance. So, when you're at a resistance level, whether there's a sell signal or not, it's never a bad idea to take something off the table. It's just you have to decide how aggressive you want to be with it, right? If you want to be aggressive, meaning I want to let this thing ride. I took the risk. I want to let this thing ride. Okay, that's your level of aggressiveness. If you want to be a little more conservative, you could say, you know what? I took the risk. This thing is nice and green. I'll take 10% off, right? Just to lock something in because we're at a resistance level, and it's very possible a sell signal could develop out of nowhere. Someone was asking me about what coin was it? It may have been Atom or it was one of those coins, or maybe it was Chainlink. I can't remember which one it was, but the guy had it from a really low price, and I said to him, he asked, what about this level? And the level was 43. I remember the price, I just can't remember the coin. And I said, there's no sell signal here, but it's at a resistance. Right? There was no sell signal at that time. Over the next day or two, a sell signal developed. So I warned him. I said, you might want to take something off in case a sell signal develops, but there's no way to know until it develops. Right? So that's why you have to decide how you want to deal with that. So thanks for asking. David, SOL. Sure, David. Let's take a look. Solana. SOL, USDT. All right, so this is generally, I remember all the hype on this one, right? Oh, this thing's going to do this and that. So general trend bullish. But the more recent price action, the structure is bearish. Lower high, lower low, right? Lower high, lower low. Lower high, bearish candle, sell signal. I would be anticipating a lower low based on that structure, okay? Based on the structure. Now, again, it's about if. Because if that structure does not want to follow through, and this chart shows us another look instead. Like right now, the structure says to us that we should reasonably expect a lower low. That's what we should expect. If the market changes its mind and says, nah, I'm not going to show you a lower low. I'm going to show you a failed low, or I'm going to show you a higher low. That's not something that should be developing in this structure, right? So that's a change. And that could be a sign of strength at that point, but then you need to clear that resistance. So as far as like swing trades, there's no reason to buy this thing right now. You are at an attractive level. These are not highs, clearly. You are at support levels, right? So that's a good thing. But the recent price structure is still counter to the long idea. So it's not a good time to start getting long yet if you're looking for swing trades long. As far as inventory, again, that's something you have to decide. I'm not a big fan of any of these. If this structure continues, I mean, you're looking at, if these supports break, you're looking at lower highs and lower lows until it changes. Who knows how low it can go? If Bitcoin breaks, these things are probably going to be under pressure. Does that make sense? So there's nothing to do here right now until that resistance breaks. I would wait because I want to see the structure change. And most of these things, they don't do their own thing. Most of them are followers. So that's why it makes sense, like use Bitcoin as your guide. If Bitcoin can't get its act together, I wouldn't expect much out of these. All right? So thanks for asking. Let's see what else we got here. Oh, no. The Russian porn guy. He has a different name, though. Okay, listen, Russian porn spammer. You're spamming the wrong group, okay? If you want better click-through rate, go find a fake guru that has thousands of people watching in the live stream. Paste your link in there, and you'll probably get a better click-through rate. My people in here are not interested in Russian porn. They're interested in charts. So just letting you know, all right? And stop. I'm going to have to block you from this channel because you keep doing it. Every time I do a stream, this guy must like me. Because every time I do a stream, because, I mean, clearly, there's no way he's making money with my group. There's no way. I only have a couple of people in here, all right? I don't have thousands of people. What's wrong with this guy? Man, novice spammers. He needs to take a class on spamming. All right. Shervin, hey, good to see you. Alibaba, let's take a look. Stock, Alibaba. Baba. All right. Chinese stock. As we know, China's been having problems, right? Look at this. Someone had asked about this because I have this line. Look at this line on my chart. I had this drawn in. I didn't just draw this now. You could see I pulled up the chart and the line was there. Someone had asked about it. We were probably talking about the support level here. I don't know because I don't remember talking about this recently. But look how it touched that line, right? Does that look familiar to you? Old support, broke the support, becomes resistance. Look at that. Very interesting, right? All right. Anyway, I just wanted to point that out, especially for students. Now, since then, look, you have lower highs, and you have an attempt at a structural break here. You have a double bottom right here. Notice this? Broke the resistance. Broke that little mini lower high resistance. That's a start. All right, that's a start. But here's the thing. This broader trend is bearish, right? I mean, there's lower highs and lower lows. Let's take a look at a weekly chart. This thing is just, look at this. This thing is not doing well at all. It's broken supports, like all supports everywhere. So you had this support from back here. It broke that. It's trying to recover from there. But man, this thing has a lot of work to do. before I say it becomes more attractive for swing trades at least. Now, it's Alibaba stock, so something like this you may be thinking more long term. So if you're thinking long term and you want to cost average into something like this, okay. I mean, it's a speculative stock, but it's got more substance than something like Vechain. So you have a lower high developing here relative to the entire structure. On top of that, you have see this gap right here? That's also a problem. Gaps typically act as support or resistance. So obviously that's a resistance that would have to be cleared. So I wouldn't touch this thing. Swing trades, no way, right? No swing trades. I would be watching, if you're interested in inventory, you're at an attractive level, but because the structure is not exactly favorable, you should skew smaller. And what I mean by that is, if you let's say you wanted to invest, I'm going to use a simple round number, $1,000, right? That's all you're going to invest in this thing, let's say. And you're going to break that $1,000 into $100 investments. And you're going to invest $100 every month. If that was the case, like in this situation, you should be investing $50, right? And skew smaller, because this thing right now is likely to go lower. Why skew larger if it's clearly going lower? Okay, and the broader trend is bullish. I've talked about the opposite. When I talked about averaging in Bitcoin, I say skew larger at lower prices, but Bitcoin has a different looking chart. That's why I say that. This chart is not exactly bullish, right? This is not really that bullish. So you might want to skew smaller until the structure really proves itself. Does that make sense? If you're thinking of investing. All right, so thanks for asking about Alibaba. Good chart. All right, let's see what else we got here. So NIO, Stian wants to see NIO, N-I-O, the stock. All right. Oh, look, we had a trade in this a while back. So this stock sucks. All right. I mean, well, look, I won't be so harsh on it. The general trend is bullish. NIO had a nice run. Since then, it's been nothing but consolidation. Notice, right? Notice this is so long-term trend bullish, mid-term trend range bound. Short-term trend, which would be this right here, right? That's pretty much the short term, is somewhat bearish. Lower high trying to push the lower low. It's failing to go lower. It's slightly lower than this. Notice? So that's a failed low trying to develop. So this one would be certainly a good one for the swing trade long radar for that reason, because it's trying to reverse, it's trying to change its structure in an attractive area. Does that make sense? So if you're interested in a long on something like this, I mean, you have a couple of ways you can go about this. You could wait for the next buy signal. It's trying to give you one. If this candle, you take out the high of this candle, or you take out the high of this little movement over the next week, that could be a buy signal. Or perhaps you want to, that's aggressive. If you want to wait for something a little more conservative, perhaps you wait for a test of the range low again. Now, just keep something in mind though. When you look at stocks, you should always consider the broader market. You should always consider the S&P and the NASDAQ, right? And the S&P and NASDAQ, I just looked at the S&P before, it's still generally bullish, but if it changes, and it can change, if it changes and the S&P breaks supports, this thing is breaking supports most likely, right? Many stocks are going to suffer when if the S&P breaks. And as we know, the S&P is going to a rising rate environment. So it's hard, it's hard to say, will the S&P break? What catalyst is going to keep the S&P going, right? Maybe the S&P can shrug off the pressure of the rising rates. I don't know. We have to let the market tell us. But that's just a risk, another layer of risk you have to keep in mind. But if you want to just get involved in something like this, your risk is going to be defined by that range low, which is what, 31.5 around there. So if you get involved and it breaks that 31.5, don't stay in it. Okay, a lot of people make that mistake. Like with something like a CGC, for example. CGC went from $50 to like, what is it now, $12? Imagine, people just stay in it because it goes slowly, right? Oh, it's minus 50 cents today. Oh, it's minus $1 today. I'll just hold on. It's $12. And next thing you know, your $5,000 investment is now $1,000. You're like, what happened here? So that's why your risk has to be clearly defined. Don't get stuck in these things. NIO is an up-and-coming stock, right? Competing with Tesla and all that stuff. I get it. So it has some value, but make sure that risk is defined. Don't get stuck in that. That's my biggest thing I can say about that. All right. So thanks for asking. All right. What else we got here? I know you don't like to look at BTC dominance, but can you please take a look at? All right. You want me to look at it? I just explained before. I don't waste my time with these things. You know, this is BTC dominance. What is this chart going to tell us? Right? This is just an extra layer of complexity that does nothing for us. I get nothing out of this, right? So BTC dominance trying to hold support at this low, right? It's been making lower highs. So whatever that means, right? I guess if this continues and Bitcoin dominance breaks that low, I guess Bitcoin's breaking 42K or 40K. I don't know, but I don't need this. All you're doing is complicating things, right? It's unnecessary. Don't complicate things. You don't need it. It offers no advantage. So I looked at it. I don't see, all I can see is a possible support, but I see lower highs. So if it breaks, maybe that tells us Bitcoin's going lower. But I don't need this to tell me that. Bitcoin told me it's going lower. So thanks for asking. Alex, it seems it's going to historic levels. It seems it's going to historic levels from 2018. Okay, Alex, I'm not sure. Okay. You're talking about this thing, historic levels on the weekly. As far as Bitcoin dominance, okay. But look, this thing's all over the place. Look at this. This chart, I just don't really see any value, or this doesn't help me at all. The Bitcoin chart itself gives me much more valuable information. But thank you for bringing it up, though. It's a good example for people to see. Hey, Abraham, good to see you. If BTC will lose 40K, then the alts will drop even more, and the dominance will go up really fast. Okay. I don't need this chart to tell me that. I could have told you that the alts are going to go. The alts are going to be pressured. I'm suspecting that just from the rising interest rates. Okay, just because speculative assets don't perform well in such an environment. We have to see. Abraham, good to see you. Visionary. Okay, yes, visionary. Ford. Thank you, visionary again. I know it took me forever to get to your request here. Man, Ford's been out of control. Look at this thing. You would think that this was an altcoin. You would think it would be FUSDT, right? Damn. All right, so here's the thing. What price is this thing right now? 25. What is Ford doing at 25.19? Oh, look at this thing broke. Look at these supports, resistances that it broke. Man, this thing is nuts. All right, so here's what I have to say about this. I mean, you guys know. What do I say when we see an altcoin that looks like this? For one, you can't buy this. You cannot buy this at these prices. You're buying highs. So if you have some, doesn't hurt to take something off the table. At the moment, there's no sell signal on this thing. Nothing. There's nothing that says get out. But that doesn't mean a sell signal will not develop. Okay? So if you have some profit, certainly take some off at the highs when you have your Robinhood people jumping in here. Because who else would buy at such a level? Mindless Robinhood people who react to things that they read and things that they see. Take some. I would say it would be a good idea. I can't give you trade advice, but take. I think it would be a good idea, or a more effective thing to do, to reduce your risk. Right, lock in profits. It says lock in some profits. You want to let some ride? Hey, that's going to depend on how aggressive you want to be. There's no reason to get out of this thing yet. This thing has a long way to go before it becomes bearish. I mean, we don't even have a high or low. Nothing, right? So lock in something, see what happens at the next high or low, see if this thing continues to make highs. Rising rates may not be such a good thing for this thing. I don't know. So you have to see how that goes. But right now, at this moment, if you want to buy Ford, you need to wait for at least a test of some kind of support. Your support is right there, right now. That would be the support area I'd be considering, and that's around $16. Okay, it's a good $10 move lower. Or $9, whatever. So nothing to do there. Thank you for asking about Ford. It's a great looking chart. I mean, clear strength. But now you need to see another higher low develop. Or you know what you want to see? Look at this nice little consolidation. Look at that. Look at that. Lower high, lower low, like that little mini bearish structure. Notice I'm not calling that a trend, right? Little mini bearish structure. And I had some lines there drawn previously. So someone must have asked me about Ford. And look how it reversed off of that. And I mean, it's been spectacular. I haven't been tracking Ford. Man, what a move. So certainly a great one for the radar. Thank you, Visionary, for bringing it up because I don't follow Ford that closely. I should probably start. Okay, Kai, it's worth looking at the funding rates. Okay, Kai, funding rates backs the idea of retail being, okay, at every major reversal, 21, retail is always net position abs. Ah, interesting. So I guess what that's the funding rates are what retail traders get for staking their coins or lending their Bitcoin. Is that what that is? Because that makes sense. I mean, Kai, obviously we're on the same page, Kai. I mean, just looking at the answers that you've given me, you get it. So that's interesting. I'll have to take a look at that because see, something like that would carry more valuable information than something like a BTC dominance chart because funding rates affect people's decisions, right? We have to look at this from a psychological perspective. That's really the basis of everything I do is really rooted in psychological aspect or basically the herd mentality. That's what this is. This isn't like math and science and blah, blah, blah. This is really sentiment is what we're evaluating here. Because as a retail trader, I think that's the only opportunity we have because we can't compete in other areas. We cannot compete with algos and the advantages that they have. There's no way we can win, all right, in that game. So we have to find an area where there's still some sort of way that we can gauge a loose probability and control risk in a reasonable way. And I think sentiment is the only thing we have. So anyway, Kai, thank you for bringing that up. That's interesting. But things have changed now. It's the first time we have potential hawkish Fed and lots of institutional money. Okay, so in a way, it's a new market. So previous patterns, right? Okay, good observation, Kai. So we have to keep an open mind. And you know what may have occurred previously may not occur in the future. What you just mentioned there is the same argument that I have with these people who come up with these Bitcoin analysis, like the Bitcoin seasonal analysis, right? You know what they say? You know, if you look at Bitcoin going back to 2014, and then you look at it today, then, you know, there should be a 80% chance that it's going to go higher. Bitcoin was not controlled, or I should say, affected by heavy, you know, institutions back then, right? Institutions were not involved. Institutions change everything. And institutions are the ones that establish seasonality, not little retail traders. So that's why when the population changes and that basically that order flow structure changes, or who's behind it, when that changes, that's going to change the behavior. That's why you can't compare order flow from 2014 to today. You can't. It's irrelevant. It's like comparing apples to oranges. But you want to know what these fake gurus do? Let me just let you in on a little fake guru trick. So they'll compare apples to oranges. Here's what they'll say. They'll say, well, you know, apples and oranges, they both grow on trees. They're both round, and they're both part of the fruit family. They're both fruit. So therefore, they're the same. Okay, and you can trade apples like you can trade oranges. No, we all know that they're not the same. But they make these convincing arguments, and they fool a lot of people, especially people that are looking for hope. Man, I've learned people want to be lied to. They want to be lied to. That's why no one likes the stuff when I come out with stuff, because I don't lie to people. Like, look, this is the reality. They don't want to hear reality. They please lie to me. Please tell me my losing position is going to come back so I don't have to feel so bad all the time. Please lie to me. That's the herd. All right, anyway, I'm getting crazy over here. So let me see what else we have. So Kai, thanks for bringing it up. Obedience is moving averages by retail. To moving averages by retail is my pet beef. Obedience to moving averages by retail. Okay, I'm not sure what you mean by that, but yeah, I mean, as far as moving averages go, they're a gimmick. Like I said, they can have some use in certain situations, but you really, really need to understand the character of a moving average and how it's derived and what its function, right? You need to understand that and its limitations, because if you use moving averages and you depend on them, during a trend, it works out, right? But markets don't always trend. When they get into a range, you will lose any money that you made during the trend, and you follow that moving average when the market goes into a range, because the moving average is not going to tell you that it's going into a range until after a while. okay, you're going to lose any money that you made in the range, thanks to the moving average. So don't use moving averages. They're a waste. That's what I say. Anyway, Shervin, okay, no problem. Stian, so for stock monitor, the S&P and NASDAQ, and yes, Stian, you got it. You got it. Right there, if you just follow that, you will be ahead of many people, because a lot of people look at these things in isolation. You cannot do that. So you got it. Alex, do trend lines help us, or do they bring more confusion? What about patterns like head and shoulders? Okay, Alex, good question. Trend lines are helpful because they project price into the future, and they offer potential inflection points. So they can help us move our mindset from reacting to anticipating. So they are helpful, but they are also random in nature, right? So that's why having some sort of set of rules or some sort of confirmation process is extremely important. You can't just use trend lines alone, because alone they provide no value. But they can help at least shape our mindset properly. Does that make sense? Patterns like head and shoulders also appear randomly, and they can have some value, but in order to use a pattern, you have to have context. If you look at that pattern out of context, it's useless. Keep that in mind, okay? A double bottom that shows up in a a broader bullish trend is not the same as a double bottom that shows up in a broader bearish trend. So you need to understand that people, oh, it's a double bottom, I'm going to buy it. Right, but in a bearish trend, the chances are that double bottom is not going to go anywhere, and it's going to fail, and it's going to break. Okay, the context of the trend carries more weight than the double bottom pattern. So you need to keep that in mind. Patterns are helpful because they do signify something in the order flow, yes, but understand also their limitations and their random nature. I follow patterns, I use patterns, and I use trend lines. I don't use moving averages. They're a complete waste. And it's not like I have a closed mind and I've never used moving averages or oscillators. I've spent many years wasting my energy on these useless tools that I was misled to believe that offered some kind of advantage or something. Complete nonsense. Okay, I was lied to and misled, and I believed it because I didn't know any better. So I'm telling you, it's useless. All right. Anyway, I'm yelling again. All right. What else we got? Avi, hey, good to see you. Okay, FTM, sure, I'll take a look. Okay, no problem. All right, how am I doing? I got to wrap this up here momentarily. Oh man, I talk way too much, people. You guys got to stop me. All right, so I'll take a look at that, and let me see what else. Neo looks like a wave 4, doing the same moves, but with a few weeks behind. Okay. Funding rates are the interest for leverages. Thing is, they can be positive or negative. Positive means net long, negative, net short. The stronger in one direction, the stronger retail is positioned. Okay, good to know. Funding rates of 0 would mean that on a particular exchange, as much money is short. Oh, I see. So it kind of gives you a sense of how retailers are positioned, sort of like the commitment of traders report, right? I guess it kind of sounds something like that. Which, again, that's knowing how retail is positioned can give you valuable insight. But the value is really going to be at the extremes, right? When retail is extreme net long, which I wouldn't be surprised if that was the case at 69K, or extreme net short, that will probably, that's where the value comes in. When it's like average, when you're around like near an average, like you're near 0, that information is probably not that valuable. Okay. I have the lowest possible opinion of moving. Oh, Kai. Okay. Yeah, me too. And there's good reason for that. Like I said, I've tried everything. Okay. Moving averages are useless. And I get these, I watch these fake gurus. Hey, let me show you. You put the 200 moving average, okay? And when price is above it, you go look for longs. And then you put the RSI. When the RSI goes above 50, you buy it, right? And then if the price goes below the moving average, you sell it. And it's complete nonsense. And then they'll say, hey, it's got like a 90% win rate. And yeah, because I took 10 trades and 9 of them worked. So it's a 9% win rate. Yeah, thanks for the small sample size. Thanks a lot, Captain Obvious. All right, anyway, I'm getting out of control here. All right, let's take a look here. All right, so FTM, Let's take a look. All right, thanks for asking. All right, people have been asking about this. In fact, I think, Avi, you're the one that keeps asking about it. All right, look at this thing. Very similar to what we just looked at in, what was that other coin we just looked at? Very similar to, what was it, Vechain? No, not Vechain. What was the one that was on its highs? Oh, maybe it was Atom. Look at this. Look at that double top sell signal. You should, if you're long, this is saying right now, you should be taking profits. That's what a sell signal looks like. So, you know, if you bought like near a low and you're like, okay, I'm going to hold it, I'm going to hold it. And then it does this to you. That's a change, not a change in trend, but it's a change in momentum, right? So when I say give things a chance, you know, I always say, hey, give it a chance. Like Ford, we were just looking at Ford. Ford was vertical. There was no sell signal. This has a sell signal. So this says take something off the table, right? Especially if it starts breaking these lows. Now keep in mind, the structure is bullish. We have higher lows, right? Now this is not exactly a higher high. It's a higher high relative to this structure, but it's not a higher high relative to this back here. You see this? It's not a higher high. So that's a double top. And if that double top sticks, this thing can go all the way back to, what is this? $2, $2.10. It can go all the way back to these lows, back to the December lows, and be range bound. So this would be a place to be reducing risk, not assuming risk. Does that make sense? And yeah, that's really this. I wouldn't be buying inventory here. There's no reason to buy inventory at a high. Although inventory is really not about, it's not really about market position, but why buy highs? You know, it's just completely unnecessary, I think. If you're going to do anything, at least wait for the midpoint of the range. Why buy the high, especially when there's a sell signal in your face? So I hope that makes sense. Now, if you're thinking long term, then I'm not telling you to blow out your whole position, but it's a good idea to take something off the table if you have a profit, because you could probably get it back at a lower price. No guarantees, of course, right? I'm not giving you trade advice, but I just want you to understand that that's the perspective. So I hope that makes sense. Okay, and all right, cool. So that's that one. So let's just go back to Bitcoin here, and as you can see, there's a sell signal in Bitcoin, and I would be anticipating that's going to put pressure on a lot of these coins. It's probably why we're seeing sell signals on a bunch of these things. Meanwhile, we have things like Cardano that are trying to change. So keep an eye on that. Those are Cardano. I'm glad that guy brought up Cardano, because that's unusual, and that's what you want to keep on your radar. Okay, a stock like Ford, if you're into stocks, this is a stock you want to keep on your radar. Okay, there was another coin, I can't remember it now. Was it Matic? I don't remember. But some of these coins have decent structures. Was it Atom? Let me see. They have some decent. Okay, no, this is the one that I was saying has the same sell signal, right? So these things, if it looks like Ford, then that's something that you certainly want to keep an eye on, because that's strength. Now, that strength may not stick around because we have a changing environment that's coming. We have to see how these markets behave in the coming environment. Interest rates have a major effect on everything. So that's why I have not been very optimistic about this space. I see a lot of junk on YouTube pushing, 100K Bitcoin, blah, 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 blah. Okay, understand that their agenda, these people don't care about you. Their agenda is they want you to click on their affiliate links and all that garbage. And just understand that YouTube is not a good source for this type of information. It really isn't. It's more of like I said before, it's more of like a video game. It's more of like entertainment, but it sounds plausible. They really dress it up well. They use fancy words. And because you may be unsure, you're more likely to believe them, especially if you're in a position where you're taking pain, because you're going to want that drug of hope. And they sell that drug all day long. Hope. Hope, hope, hope. Just have hope. It'll come back. Don't worry about it, right? Hope. That is what these guys sell. That's why a fake moron can show up out of nowhere and build a huge channel on YouTube selling hope. Now, look, I can understand. Hope is all around us. People write songs about hope. If you sell dating advice, or if you sell fashion advice or you sell shoes, sure, you want to be optimistic and hopeful. Yeah, buy these shoes and you're going to look good and all the women are going to be chasing you. Okay, you hope, oh yeah, I'm going to buy those shoes. Okay, cool. When you buy shoes or you buy fashion advice or you buy dating advice or whatever else they have here on YouTube, you're buying a product and more money is not at risk. If you don't like your product, they got me on this one, okay. But you're not throwing more and more money out the window. The market is constant risk and it can go to zero. Understand, the markets are about risk and how you manage risk. So that is why I focus on helping you think in a defensive mindset. Think defensive. Stop thinking profits first. Think risk first. Profits are random. If you can control your risk, then you're likely to position yourself in a better place where a profit is more likely. Now, here's the thing. It's not profits that make you money. It's the lack of losing trades that make you money over time. Does that make sense? If you lose less and you retain more of the winning trades that you make, that's how you grow. Not people think, oh no, I'm going to maximize my profit and I'm going to turn $1,000 into $20,000. Wrong. If that's your mindset, erase it now. Okay? That's all I'm saying. Think defensively. All right, you guys. All right, okay, hold on. One more. Vito? Vito. All right. Since your name is Vito, I'll take a look at ICP. Okay, Dash. No, I have to. I'm running out of time here. I gotta hang this thing up. I gotta go. But hold on. Let me just read these text things here real quick. Okay. Mr. Plow, no problem. No, I'm not streaming on Thursday. No more Thursday. I'm very busy right now, so I had to cut Thursdays off. Thank you for asking. So no Thursdays. Alex, problem for me with trend lines is that they look different whether you're using linear. Oh, well, so I mean, Alex, you know what? That could be, I can understand that, but generally I don't find that to be much of a problem because you know what? I'm not using the vertical trend lines anyway. I'm using horizontal lines. Vertical trend lines, they're not bad. I'm not going to say they're bad because again, at least they're positioning you to anticipate in the future rather than react now. But I don't use those. I use horizontal. So I don't have a problem with that, but I understand. Okay, Avi, no problem. Okay, let me see what else. Okay, I hope your ebook. Oh, Avi, good, cool. I appreciate that. Thank you, Avi. I appreciate that. I'm glad you find it useful. All right, Vito. Let's take a look at ICP. All right, that's my Vito accent. I know you probably don't speak like that, but Vito. Hey, from Brooklyn. No, I know you're not from Brooklyn. All right, let's take a look. So here's ICP, right? Is this the right one? ICP. Now. This one, all right, let's go to the weekly, right? This is the super, I remember this one when it first came out. I mean, look at this ridiculous, look at this nonsense. Who got stuck in that? I hope you're not stuck in that from that price. Since then, lower high, all right, lower high, right? Lower, well, that's not a lower low yet, but we have the lower high here, lower low. Lower high forming right now. So we have no choice but to expect a lower low. In fact, you took out the previous week's low, not good, bearish, okay? So I wouldn't be buying this thing, that's for sure. It's too early for long. Now, you could say, well, wait a minute. Look at the daily chart. Low, higher, high, right? Look at that. What is that? Well, that's a potential change developing, right? But you have this resistance right here. And that potential change developed around this double bottom support. So I could see your argument for, hey, maybe I should start giving this a chance because the weekly chart's not going to show this kind of detail, right? So you do have a potential change. There is a higher low and it has taken out some minor resistance levels. And you have another higher low developing possibly if it can develop a buy signal here. There's no buy signal right now, all right? So at this moment, I would anticipate that the lower high should lead to the lower low, kind of like that Bitcoin situation. So here's how I would treat ICP. If you want to be aggressive, you look for the next buy signal in this area if you want to be aggressive. And then if you take that buy signal, it needs to clear this resistance. If it can't clear that resistance, this structure is bearish, okay? It needs to clear that resistance. If you want to be more conservative, you don't do anything and you wait for the resistance to get cleared and then you start looking for higher lows. Sure, you're not going to get the price that you can get now, but at least you're getting into something that's more supportive. Does that make sense? So that's ICP. All right, so I'm not going to run through the other one. I have to wrap this up. I wanted to at least answer one of them. I hope that helps. All right, everyone. So I want to thank you all for taking the time here, asking great questions and participating. I know I talk a lot, so I appreciate the participation. Also, again, if anyone wants to check out Greenbridge, there's a link in the descriptive portion. That's the signal service and all that stuff. Otherwise, I'm going to thank all my students for stopping by and participating. You're only going to get more out of this, and so I hope you're having a good experience. So again, wherever you are in the world, enjoy the rest of your day, the rest of your evening, and thank you so much for watching.